Good morning. It's Wednesday, July 2nd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So silver futures, kind of a wild ride yesterday. They were up about 50 cents here, looking like they were going to break out, and then gave up all their gains, ended up about 9 cents higher on the day here. So is it triggering you guys? We're going to have to wait and see what happens with that market here. So stock futures, they are slightly muted here. We did have the NASDAQ just briefly dip negative, the S&P 500 slightly higher here as traders await a House vote on the Senate version of Trump's tax bill. This may widen the deficit by about $3.3 trillion over the next decade. And then finally, we'll have Thursday's payroll data. Looks like Trump and Musk, they're back battling it here back and forth again, so causing a little bit of volatility in that NASDAQ. Tesla really getting hit here yesterday. And then finally, we do have the trade talks. They are also in focus ahead of July 9th. Now, Trump did come out with some criticism with regards to the trade data, the trade talks and things like that, really critical of Japan and a couple other countries out there. And what we saw was a big sell-off here and a sharp correction quickly in the U.S. equity markets, but the dip buyers are really taking focus on any kind of correction in the U.S. equity markets with momentum moving higher, and then also traders and investors feeling underinvested. So looking at the S&P 500, about 10 basis points here at about, we're sitting at 5:51 a.m. Central Time here. NASDAQ, again, just slightly lower here, and you want to expect to see this low volatility this week as we start to front load into a bit more economic data, and then we will spiral off, and quickly that volatility will fade as everyone goes on their holiday break. Now, we're going to need to see a volatility surge in order to get through that 6,300. Your first level of support on the S&P 500 is going to be at 6,220. A break below that on any kind of acceleration in volume could open up the door for 6180. And if we could break through this overnight high, this 6265 on up to 6270, I would expect to see about 6300 being challenged. So I just gave you a trading plan right there. Not a formal recommendation, but if you jot all that down, you could probably lay out some kind of day trading plan here or swing trading plan for yourself. So looking at the gold futures, they did rally $35 yesterday, trading up to $33.50. Overnight, they are slightly higher, about $5 here, sitting right on the highs of the overnight session, $33.55. You do have silver futures kind of creeping back up, $36.49. Think about silver right now, and I'd have to draw this backwards for you guys, is that chart pattern kind of looks like that. So it's a bull flag. And then what you want to see is you ultimately want to see that market break out above it. The problem that you're having right now is you got these candles that look like this, and you got a candle that looks like this. And what's that show you? That's within it. And so when you get these big candles, you get this big wick, and it goes down and it closes near the low of this session. Well, those are the sellers coming in, and those guys are all up here. And then when you get this big lower, this wick coming up, and we close near the high of this session, that's what's going on right here. And those are the dip buyers down here. So the market's really complacent right now at the moment. So quite impressed that I could draw that backwards like that. Maybe it's because I'm left-handed. I don't know. But anyways, so you look at what's going on in the silver. That's pretty much about it right now. Now, silver really needs to take some clues and some cues from that gold and from that copper market, because you got some things going on in the copper market. Now, before we get to that, you do have the volatility index remaining low, so it's about down that 20 level. We're sitting at about 1852. Now, how is gold futures moving up and volatility moving lower? Well, it's because the next quarter, and we just went into that in the second half of the year, you expect to see two different economic regimes really fighting it out. You're going to see the U.S. economy decline while inflation rises. Now, that doesn't mean just go out and start shorting the S&P. You want to see continuous breakdowns, really, in order to have that. So generally when I counter a trend trade, I'll use options, put options, rather than just shorting the futures, unless you're right up against a resistance, and then you can use the stop. But that strategy talks over here. So GDP and the labor market are expected to decelerate, while inflation via CPI is expected to accelerate. So the upcoming U.S. employment report for June, which may show a slowdown in the payroll growth and an uptick in the unemployment, could potentially strengthen the case for Fed cuts. That's where you get the put coming into the stock market here and really protecting any kind of sell-off as the dip buyers emerge. So a lot of times we face this kind of economic regime where you go go through a reflation period, you get some better numbers, you get hopes that the Fed's going to cut rates, and then you get the stagflation where inflation starts to tick up and the Fed can't do anything. That's where you got to have this balanced portfolio. So you got reflation and stagflation. They're really fighting it out. And that's where owning things like gold, energy, fixed income, and growth generally work well in all of these environments, while you want to actively manage the position because you're going to have economic data come out one day and it's going to flash one type of regime, and then the next day it's going to flash the other, and it's going to be a little bit choppy here where you'll see big disconnects in different markets here. That's why you saw the Russell moving up quite a bit yesterday. You saw the gold market moving up quite a bit, and then you saw things like the tech market selling off along with Bitcoin. Now, if you look at the copper market, copper's really been interesting, and copper's really a global commodity. So rather than getting a sense of what's going on in a specific area, you want to really look at globally, how's the market moving? What are the large picture dynamics here that are impacting that particular commodity? And copper futures are currently making new highs here at about 514, and they're boosting that silver market as we speak here. And it's because of the fact you've got some effects of a supply disruption down in Peru and a shortage of copper going on in the LME. So what's going on in Peru, where the miners down there, they're blocking roads, they're impacting the copper transport for some operations. We see this all the time. I see this with platinum all the time. Sometimes you'll see it with the agricultural markets down in South America. As they seek better regulations on small scale mining, they're probably looking for some payroll increases too. So what type of disruption is that? Well, that's a short-term disruption. So you can't really just bank continuously. The picket line's not going to stay out there forever. So eventually it'll end here and prices will have to reset. So how much is taking into play? Maybe a couple cents, nothing really big here. But the investors are really paying attention to the shortage of supply following the quick decrease on inventories at the LME in China. And you got this significant difference between the cash and the futures contracts, and that's where you get your squeeze going on. Now, quickly looking at the ETF flows here, they did cut 100,000 ounces of gold yesterday, and they also cut 1.2 million ounces of silver. So that's where you get this battle going on here with some of these markets. So year-to-date percentage change, gold up 9.2%, silver up 7.8%, and the gold-silver ratio sitting at 92-1. So you guys got any questions? You got Bitcoin moving up about $2,600. A lot of you added Bitcoin yesterday, saw that on the sell-off here, and you're going to want to play that channel as it's also got a flag. And make sure you get that precious metals, that chart pack here. Also sending out kind of a chart of the day. I labeled it precious metals chart of the day, but really it's going to be whatever chart out there on any commodity or anything that like highlights where I see something that could potentially be actionable. And if you look at the gold market, well, it's got one of my favorite patterns out there where it sells off, makes that lower low, and then has a 2-day recovery, and it seems to be either breaking out to the upside or it's going to roll over and die on us. But it looks like it's trying to push and make new highs right now as we speak. So you guys got any questions, give me a call. I'll be super swamped here in the morning here until about 7:30 a.m. Central Time. So you guys got any questions, shoot an email, info@Blue Line Futures. You want to open up an account, give us a call here or shoot an email at info@BlueLineFutures.com. See a lot of people selling off their physical metals, re-owning it just like a farmer on the board with the futures contracts. So real easy with the 1 ounce, 10 ounce, and the 1,000-ounce silver contracts for you to do so. And if you got any questions, you can reach out to me directly on that. So remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading, go get them.